Welcome traders to TraderTalk. This is Tony D from Easymarkets and Sydney Dealing Room. We're going to be going over a couple of different little tips and tricks making sense of the markets. Today it's a very quiet start to the week. This is the 11th of July 2017. You're seeing dollar yen holding above 114 but unable to push higher. Now a lot of traders, a lot of clients ask me, why is it that dollar yen is so high in the first place when the US dollar is so weak? And if you're looking at the dollar index, you'll see that the US dollar has been under pressure for the last, say, 3 to 4 weeks. This is as the market started to price out aggressive hiking this year and perhaps next year, a little overdone. But what we've seen in the last couple of weeks anyways, dollar yen starting to rally at the same time the US dollar has been weak. So if anything, the yen has been the weakest pair in the market. Now what do we put this down to? 9 times out of 10? If there is a move happening and it doesn't make sense, it's because of the bond market. So what's happening in the bond market? Well, the relationship between dollar yen and US 10-year yields is extremely strong. And if we look in the daily chart here, and you can get this chart here from investing.com, it's the quickest way to get a yield chart on any of the yields out there. But in this case, we're looking for the US 10-year bond yield. And the US 10-year bond yield is showing currently at 2.38. If you're trading yields in the market, then you are basically looking at this particular correlation between dollar yen and the US 10 years around 70%. So if it's been rallying like it has, then you should expect dollar yen to go up. See how it's been stalling for the last couple of days? Then you should expect dollar yen to be stalling. If we are to break the major levels on dollar yen, then for us to push higher, then you're going to be expecting that dollar yen to get, say, to 115 and back up perhaps to the post-Trump highs of 118. You're going to need these US 10-year yields to get back towards about 2.5. Alright, so at the moment we're at these key levels. If you're looking at some of the levels from earlier in the year, in March we topped out around about 115. And then on that second rally in April, we got up to 114.40. Now that level's the next key level here for us to get past. If we can get past that, then we can look to push higher, back towards 118 highs that we got to when Trump was first elected. Now at that time, if you're looking back at how high the yields got, they got up to around 2.59. So we can definitely got a bit of room here to move. And if we do see that happening, then if you do see the bonds start to go higher, then you should expect dollar yen to go higher. At the same time this is happening though, in the backdrop of this, you are seeing the Euro USD start to have its own major rally against most pairs in the market. And this is on the back of the ECB normalization. Now ECB normalization is where they're going from QE program to potentially tapering this QE program and then starting to raise rates next year or early 2019. So from negative interest rates going to positive, there's a really big difference in the interest rate yields between the spread between, say, the German yields and the US yields. Now as that yield changes, as that change in yield changes, you're seeing the euro start to rally. So at the same time you've got the euro rallying against the US dollar, you do have the dollar yen, the dollar rallying against the yen. That means that the euro yen is getting double sort of rally going on here. So it's moving not just with the euro, it's moving with the US dollar. So euro yen is rallied sharply around about 800 points in the last 3 weeks, and it's topping out its own little resistance. So when you get the majors, and the majors are the euro and the dollar yen having their own resistance found, and that's exactly what you're seeing here on the euro dollar, up towards its own high levels from the last couple of years, which is around 115. So you can see this massive cluster of resistance here is coming into play, and the dollar yen's resistance is coming into play. Then euro yen has its own natural resistance that you can't sometimes see on the chart by itself. Okay, but it's there because the majors actually aren't running into resistance. So is it euro yen a strong pair? Yeah, it's definitely a strong pair, and the pair that we'd be looking to buy dips on. Alright, just keep an eye on which pair though is pulling back, if it's the euro or the dollar yen, and for the reasons of each. If it's because of dollar yen pulling back, it becomes a little bit more dangerous. It's because of euro pulling back, then it's becoming a much safer buy on the dip scenario. Alright guys, that's all for Trader Talk today. I'll be back tomorrow with another update on what we'll be looking for this week. Janet Yellen is speaking tomorrow. We'll be giving a preview of that.